Howdy, Jacob here. Today we're looking at DT Midstream. So it is a $5.6 billion company, $8.6 billion enterprise value, a 4.7% dividend yield. It's in the oil, gas, consumable, and fuels industry. Looks like they operate through two segments, pipeline and gathering for natural gas. Pretty prominent growth on the revenue side. A lot of acquisitions along the way. Let's see, looks like they've been funding them mostly with debt. So $3 billion in long-term debt, 10 times what they make in earnings. Probably pretty similar to what they make in free cash flow. Their 4.7% yield costs about $250 million. I mean, for now, we can say that they afford it, but I'm not too confident in that. I mean, they last 2021, 2022 looks like they could 432 million and then 387 million. But outside of those 2 years, they're not affording that without going into more debt. And 10 times earnings for debt on long-term debt, and probably more on free cash flow side, because their capital expenditures are pretty great. So I might assume they cut that dividend in half, keep it there, about 125 mil out in dividends, and they can spend the rest on acquisitions to make it look like they're growing. So all right, let's start making some assumptions here. I just want to get right into it. So just looking at history, I mean, looks like they make acquisitions, pay a dividend. A lot of this growth is probably from acquisitions, but we can still put that 3 and 13, 3% revenue growth, 13 on the terminal P and price to free cash flow. And then as for margins go, great margins, great looking margins, but we'll see if they can keep that consistent. I'm going to do 40, 30, no share change. Pretty quick review, but as of right now with these assumptions, it's going to have to drop 55% to get to that 15% return. So I think for me, this being in the dividend yield screener, I think that paying out 250 million is manageable, but I don't think their balance sheet is fantastic enough and their earnings are fantastic enough, or their free cash flow fantastic enough to keep to be comfortable and confident that that will stick. So for right now, I'd definitely be waiting on a company like this. So thank you and have a good rest of your day.